terms of the action. We're going to keep focusing on this. But for now, let's talk about some of... actually, let's kickstart the show now by getting in a guest and, a chat on where the markets could be headed from here on. We have Bhavin Shah joining us from Sameeksha Capital to discuss where the market is really headed. Bhavin, it's good to have you on the show. We're speaking after a bit. So, it's good to have you back once again. But, take us through how you're looking at it. We saw that 1 hour of a sell-off yesterday and there was a bit of panic that set in. How are you looking at it? Is this just minor pullbacks that, we are seeing and the uptrend is still intact? Or do you think maybe we're going to see a little bit more of a pullback, considering that we've already run up like this and it's nothing too much to worry about?
I think, the pullback is always a possibility when there is such a sharp run up. And I think any negative news, and especially with respect to the small mid-cap space where the liquidity is rather low, so the stocks go up on low liquidity, and then obviously they fall even harder on low liquidity. It's like a small door through which everybody tries to enter and exit, and so it always creates that commotion. So that is always that is always on the cards. But I think in the context of where things are looking from a say little longer perspective, next few years. I think it's I think I don't think India had so many confluence of positive factors all sort of converging so well, and I think that's why I think one needs to keep that in mind. So we're probably going to see more of pullbacks rather than a big correction is what I would suspect. And I think if anything, while the valuations might be a little high on this, especially on a price to book basis on the small mid cap basis, I think the large cap space is still not too extended, at least in our analysis.
Okay, so there is good reason for being optimistic going into 2024 as well. Bhavin, morning, and thank you for joining in. You've said that this is unlike the past rallies where there was too much froth. Could you tell us what, the past cycles, you've been in the market for decades now, how would you compare what we're seeing right now in the market, this enthusiasm, the rally, the participation, how does it compare with past bull cycles?
So I think at least the way things sit today, India has, the growth momentum for the Indian economy could sustain for a fairly long period, as long as we don't get any major policy hiccups or sort of government disruptions and so on and so forth. I mean, if you look at China, for example, they had multiple decades of almost 10% growth, almost uninterrupted, or essentially uninterrupted. I think India may not get to 10% GDP growth, for various reasons. But, if we can, even if we do 7-8%, and on top of that, even say 3 to 4% inflation, I think we are looking at, and that can sustain for a fairly long period, except for any major global kind of event, that disrupts the markets, or even, event that affects our markets. So that I think, and I think the fundamentals in terms of investments in the growth capacity in the economy across every possible sector are happening, and they will continue to happen, post 2024, provided there is no major, change in the governance in the government. So I think that is what I feel is very different about this time than every past cycle, kind of a rally or a period, because I don't think we had that situation in place ever before.
Okay, that's interesting. Bhavin, you were mentioning how maybe the large caps are not as stretched, and that is the theme we've been discussing with all our guests as well. How do you position yourself now? Is it a good idea to, book profits in some of the smaller and mid caps which have run up a lot and, divert that money to the large caps? Would you be doing that? And if yes, then what are the pockets that you would want to book profits in, and you feel that maybe a bunch of the up move is done?
So we have done that partially. In fact, we had increased cash levels in our portfolio a few months back by selling some of the positions which we thought had gone up too much, and the incremental. We will always look at incremental return potential from a 2 to 3 year perspective in any stock that we own, and when that looks very minimal, we trying to exit. Sometimes we end up exiting too early because stocks continue to rally on back of momentum or other factors. But on the whole, that is our approach, and it has worked reasonably well for us so far. So we did that, and I think we have deployed some of that cash into a few large caps. But we are not shying away from also investing in small and mid caps. There is no because of what I said earlier, that this time is different, and in the sense that I think there are we keep coming across companies in every other sector where they are sitting looking at a very strong growth for a number of years to come, and if they are available at the right price in our framework, then we want to own such names, even though they may not be in the large cap space. So I think. Yeah.
Bhavin, you want to tell us some of these small and mid-cap stocks which according to you are still attractive if someone has a 2 to 3 year time horizon with the appropriate disclosure?
So I think in the wealth management space, I think if India's equity markets, obviously there is a lot of people needing guidance for wealth management. I think there are names that look interesting to us in that space. If you look at for example in the agrochemical space, companies focusing on some of the newer technologies, and as a result investing in areas which is going to have high growth. We continue to see opportunity. Even in the pharmaceutical, companies focused on domestic pharma, I think there are opportunities there. Media, like the music, the digital music era has changed, transformed the story for some of the listed digital music. Some of the music companies which obviously are seeing growth purely from digital music, and I think they all also continue to benefit. I think the healthcare, going back to healthcare, I think a number of hospitals, and I think that segment is going to see a lot of growth and profitable growth. So we continue to find opportunities there. IT, going back to IT, I think while the overall industry growth is going to be slower, going back to similar to pre-COVID levels eventually, I think the companies which are focused on niche segments, which are growing much faster, I think we continue to find opportunities, even using our sort of conservative valuation framework. So, yeah.
Which of these niche segments in IT?
I think the one is you can look at Microsoft ecosystem. I think Microsoft is doing amazing work in terms of guiding their customers through the whole transformation in cloud, even some of the Gen AI driven solutions that they have. They are bundling with their productivity suite, and then other offerings in in Azure and other platforms. And I think the companies which are providing either the solutions or services in that area, linked to that, are enjoying very strong growth. So we are, that's one niche area that I can immediately think of where we are seeing companies doing quite well. Even some of the other platforms, Salesforce, the companies which are very positioned in that respect, even Oracle. So I think we look at which technology platforms are having strong momentum, and which Indian companies are going to benefit disproportionately from that. The smaller companies benefit disproportionately because their revenue base is smaller. Larger companies also participate in a lot of this, but they have to grow from a much larger base.
All right, got that, and very interesting chat. Thanks a lot for joining us and taking us through that quick take on the market and some of these individual pockets as well, where you still find some opportunities. That is the word in the market, but with that, we're going to get into a break. The market is absolutely flat right now. The banks, after mildly breaking into the green, are now around 85 points in the red. So it's a very volatile market, perhaps some thinner volumes as well. But we will get into a short break.